Ethereum whales are moving, Solana goes on a massive rally, and Metamask is launching an amazing new feature. This is your Altcoin Buzz news. Hey, what's up everyone? My name is Cody Buffington. Make sure to like, subscribe, and turn on notifications so you know when we drop our latest content. Follow us on Twitter at AltcoinBuzzIO, and as always, this is not financial advice and we wish you the best of luck in your crypto ventures. The Bitcoin Fear and Greed Index reached an index score of 52 over the weekend, marking the first time it hit neutral territory in 3 quarters. On January 15th, the index reached a neutral level of 52, its highest since April 5th, 2022. The move follows a 24% gain for Bitcoin over the past 7 days. The market sentiment tracker hit a multi-year low of 9 in June 2022, and since then it's been hovering between 20 and 30 in the extreme fear category. The Fear and Greed Index uses motions and sentiments from different sources, including current volatility, market momentum and volume, social media, and Google Trends. The data from these sources is then used to create a specific number to summarize the emotional landscape regarding Bitcoin and crypto markets. The index has since dipped back down to 45, which puts it into the fear category, suggesting that confidence has yet to make a full return. However, Bitcoin is still above 20,000, having hit new local highs of 21,400. Bitcoin has also seen its second longest streak of gains in history with a 12-day run this month. The asset has gained 28% since the beginning of the year, wiping out all losses from the crash that followed FTX in early November. The massive momentum has created a large movement in technical indicators such as the RSI or Relative Strength Index, which has hit its highest level for 4 years on the daily timeframes. High RSI figures can suggest that an asset is overbought and due for a correction. Consensus, the company behind Metamask, said on Friday it's adding a staking feature to Metamask's portfolio just in time for Ethereum's Shanghai update. The update will soon allow users to withdraw Ether they've staked to help secure their network. Metamask's newly launched one-stop shop lets users view their crypto holdings and send or bridge them between different blockchains. With Metamask's new staking feature, they'll allow users to stake via LIDO or Rocketpool, the 2 leading community-led validator services. A product manager at Metamask said in a statement, staking via LIDO and Rocketpool involves locking up one's Ether in a smart contract on the blockchain where it will accrue rewards. Currently, this usually requires visiting LIDO and Rocketpool's respective websites. By allowing staking through the Metamask Portfolio dApp, we're providing Metamask users with a convenient way to interact with staking providers. Normally, staked Ether and whatever rewards it accrues will remain impossible for users to withdraw until Ethereum's Shanghai upgrade expected in March. Liquid staking services such as LIDO and Rocketpool get around this limitation by giving their depositors tokens representing one-to-one claim on their staked ETH. These tokens, LIDO's STETH and Rocketpool's RETH, tend to trade on the open market at a slight discount to normal ETH, offering stakers a way to enter and exit staking positions even as withdrawals are currently locked. With MetaMask staking, customers can swap their STETH and RETH back to ETH via MetaMask swaps subject to certain fees. Consensus aims to make staking via MetaMask the easiest and most convenient way to stake across Web3. Solana and Polygon are neck and neck for the spot as the 10th largest cryptocurrency as they have flipped each other back and forth over the weekend. Solana, currently sitting at $23 and an $8.6 billion market cap, has had a 70% increase in the last week. Due to the FTX crisis, Solana appears to be significantly undervalued at the moment. The price doesn't seem to be in line with what Solana has to offer in terms of potential. The chart sentiment included demonstrates that traders on Binance have exhibited a bias towards shorting over the past few months. Sol's price was able to recover from the bottom it reached at about $8 2 weeks ago. One of the most powerful men in the world, Larry Fink, the CEO of Blackrock, has just come out and said the world is going tokenized.
This is one of the reasons why I'm focused on the whole idea of blockchain for securities. I look forward to the day when we could tokenize stocks and bonds, that every stock and every bond we could identify immediately who is the beneficial owner. And this is why we're working on it. And every beneficial owner, from an individual to an institution, have the ability to vote, to democratize every single vote. And that's where we want to take this, and we're leading that effort.
BlackRock manages trillions of dollars in assets, and Larry Fink said that 2023 is going to be a year of big opportunity.
The perspective of long-term investors, I see 2023 to be enormously opportunistic. Actually, maybe the hardest years for investing for the long term were the last few years because of negative interest rates. Investors worldwide had to take on more and more risk to achieve their liabilities.
The second week of the new year has been a big week for crypto as Bitcoin, Ethereum, and Solana are racking up serious gains. Ethereum reached its highest price since November 8th, reaching $1,589 this morning. However, the market's biggest winners are none other than liquid staking tokens, also called liquid staking derivatives. The tokens behind projects like LIDO Finance up 50% and Rocketpool up 23%, which have absolutely soared over the past few days. The reason behind that? Well, Ethereum devs are rolling up their sleeves ahead of a key upgrade to the network, Shanghai, and this will enable withdrawals of staked ETH that's been on the beacon chain for more than 2 years. Ethereum's staking activity continued its upward swing as the total value staked in Ethereum 2.0 deposit contracts reached another all-time high of 16,042,000 ETH. On-chain indicators corroborated the growing appeal of the network as whale transactions registered a sharp uptick to hit the highest value in more than 2 months, a jump of almost 30% over the last month. The new participants entering the network rose steadily, indicating that Ethereum's adoption was on the rise. Ethereum's on-chain fundamentals have also strengthened this year following a terrible 2022. According to the ultrasound money tracker, ETH issuance has fallen into deflationary territory once again. The current supply growth is at negative 0.09% per year. The Ethereum burn rate is currently around 732,000 ETH per year, with the issuance rate around 622,000 ETH annually, meaning more is being destroyed than produced. Markets are still overall in bear territory, so Ethereum's demand will likely increase as more bulls return. Also, as gas prices increase, this will have a bigger impact on the burn rate. The result is a higher deflationary rate and a shrinking supply, which is very bullish for Ethereum in the long run. Polkadot nomination pools have hit another milestone. Just 2 months after launch, more than 1 million DOT has been bonded by pool members. Polkadot nomination pools make it easier to stake natively by lowering the barrier for earning rewards to as little as 1 DOT and efficiently balancing the interests of smaller and larger DOT holders. Polkadot is based on nominated proof of stake technology. A decentralized network of validators is selected by nominators to secure Polkadot's entire multi-chain ecosystem, and block rewards are shared between validators and nominators. For those who want to take the lead, you can open your own nominator pool and allow others to join and pool their stake. The maximum number of pools has just been doubled to 128. Former FTX US President Brett Harrison has lashed out at Sam Bankman-Fried for manipulating and threatening colleagues who propose solutions to reorganizing FTX US's management structure. Harrison shared his experiences with Bankman-Fried and FTX US on January 14th, explaining how he was hired casually over text in March 2021 after working together at New York-based trading firm Jane Street for a few years. But 6 months into Harrison's tenure at FTX, cracks began to form between the two. Despite recalling Bankman-Fried to be a sensitive and intellectually curious person at first, Harrison said he saw total insecurity and an unwillingness to agree on anything in Bankman-Fried when confronted with conflict, particularly when Harrison suggested FTX US establish separate branches for its executive, developer, and legal teams. Harrison added that he wasn't sure what accounted for the dramatic change in Bankman-Fried's erratic behavior, though he suspected mental health issues could have been a contributing factor. Part of the irrational behavior Harrison describes include a series of gaslighting and manipulation tactics by Bankman-Fried used against Harrison and other colleagues in the bid to clean up FTX US's corporate mess. Harrison also recalled his last attempt to fix FTX US's organization issues with Bankman-Fried, claiming that he threatened to destroy my professional reputation if a formal apology wasn't received. Harrison said that solidified his decision to leave. As for the fraud charges now laid against Bankman-Fried and the other FTX colleagues, Harrison said he was blinded by the firm's alleged commingling and misuse of billions of dollars of customer funds, saying, "I never could have guessed that underlying these kinds of issues was a multi-billion-dollar fraud. If any one of us had suspected, let alone learned the truth, we would have reported them immediately." Harrison stepped down as FTX US's president on September 27th, about 5 weeks before FTX collapsed. Former FTX CEO Sam Bankman-Fried reportedly ordered Gary Wang, co-founder of the crypto exchange, to open a $65 billion secret backdoor line of credit for Alameda Research. The attorney disclosed the information during a Delaware bankruptcy court hearing on January 11th. The alleged line of credit was financed with FTX customers' funds, and according to Dietrich's testimony, the backdoor was a secret way for Alameda to borrow from customers on the exchange without permission, adding that we do know the size of that line of credit. It was $65 billion. That's it for your Altcoin Buzz news update. I'm your host, Cody Buffington. Thanks for watching.